Hi everyone, I hope all of you are doing well. Welcome back to Your Nifty Guy. In today's video, I'll be decoding Nifty 50 for tomorrow, keeping it extremely simple and practical. We'll go through the key levels, important zones, and the possible scenarios I'm preparing for. No hype, no predictions, just a clear trade plan. If you guys are finding this useful, do give the video a like. It helps push it to more traders who need clean, clutter-free analysis. Also, subscribe if you haven't already, so you never miss these daily Nifty updates. And let me know in the comments how you are planning your trades or if you have any questions. I always check the comments and reply whenever I can. So let's just dive straight into the charts and we'll be doing the same stuff as usual. We'll be dividing the video into two parts. First, we'll be decoding what we had done today in the market versus what we had planned for today, and then we will be jumping to the second part, which is the plan for tomorrow, right? So on that note, we'll start with today's video. Today was a no trading day for me. Now, I'll quickly jump and explain how exactly the volatile nature of market today was. Markets opened with a gap up, immediately went into a selling zone. You can see the huge selling around here, which was arrested around 24,880 levels, and then immediately market reversed. Now, I was planning a long entry around here based on a previous day low uh, breakdown failure trade, which is basically people who would have shorted around here. They would have been trapped because people would have shorted trades around here. And once market started moving up, all these people who would have shorted around here would have been trapped. But then again, I am a strict follower of my setups, and it is very, very rare that I will break my setups and my system which is there. And as you guys know, I have a very clear rule of not buying into the first pullback, right? So this was the fall which came in, and this is the pullback which came in. This is the first pullback, right? I will never be buying into the first pullback. What I need is I'll be quickly using the path tool here. So since this fall had come down, which got arrested around here, the up move started coming around here. Post this particular up move, if it would have halted around here, given me one red candle and then continued its journey, I would have taken a long around here. But then again, this is the simple rule which I follow extremely well, which is never buy into the first pullback, because you never know if this is going to be a pullback or this is just a small retracement, and then again the market would continue downwards, right? So this was the reason why I did not enter into the trades around here. I could see the prices of call options going high right in front of my eyes, but this is what it means to be a disciplined trader. You need to wait for your setup in case it is not forming. It is simply not your day to trade. That is the kind of discipline I believe everybody should be having. And if I do not buy into, say, this was a good setup, right? I will not be denying this. This was the previous day low. There was a lot of liquidity lying around here. Plus, when it went down around here, the market psychology is people who would have freshly entered into shorts around here would have been trapped. So above this candle high, yes, definitely a trade was there. But for me to enter into the trade, I wanted another small pullback or a red candle or an inside bar, another maybe anything halt candle, whatever you might call it. I would have wanted something around here for me to actually go long. But since that did not happen, I did not create any position. And we had a plan of shorting the markets below this low again with a pullback. And as you can see, the importance of pullback, people who would have directly shorted the market at the break of yesterday's low would have been, look at the way they have been trapped, right? It is right in front of you, your eyes. And that is the reason why I always say do not trade breakouts and breakdowns without valid pullbacks. And as you can see, the market did go up. There was, again, the low was never breached. In case after these two candles or three candles up, a small pullback, if this low would have been taken out, we could have very well entered into a trade on the short side. But market had other plans, and post this, as you can see, the market turned volatile around here. This is the place where we thought we can look for some double top price action point, and we can look for a shorting opportunity, which did come around here. But again, as you can see, this also did not turn into a very lucrative thing. I wanted the prices to tap the zone once for it to be much more high probable. But considering this move which had come, especially after this move, right? So this move, the way I always tell you guys, try to talk to the market and you'll get your answers. What I try to decipher of this particular move around here is market did see a good selling in the first 15-20 minutes, and it was met with equally ferocious buying. Now, that means there are strong buyers present around these levels, and to enter into a short position around here would be a bit risky, considering we have traveled a great distance from the bottom. So for me, if I would have to look at active shorts, I would still wait for markets to at least go down below 50% of these levels, and then I would be looking at creating a short position on an intraday basis. So that was the reason I did not even enter into these trades. And then again, markets were extremely volatile. At the start of the day, if you would have observed, the puts were in positive, the calls were in negative. In the first half of the market, again, uh, post this recovery, the calls were in positive, the puts were in negative, and around the end, if you go and see, both calls and puts were in negative, right? So it was mostly a move, a fall and a V-shaped recovery which came in during the first part of the day, and then again, market was sideways around here, simply trapping everywhere. See, for example, this was the key level which was here. It was broken down, immediately reversed. Kind of look at the wicks which are there. So that is the reason I did not participate in any further trades, and because nothing happened on the screen as per the setups that I follow, and that is the reason I did not participate in any of those trades. And it was a no trading day for me. And no trading day is also a trading day because if nothing is forming as per your setup and you just want to trade and you will jump into random trades, you will end up hitting your stop losses, and that is the reason why having no trades is also a good trade, right? I hope the point is clear, and the importance of pullback has once again been established. Pullback is something which I clearly have been emphasizing on from the start of this channel, that do not trade any breakouts or any breakdowns without a valid pullback. Do not enter into breakouts and breakdowns directly. 70 to 80% of all breakouts and breakdowns will be eventually failing, and the pullbacks are the only thing which can save you from entering into the wrong trade and being on the wrong side of the market, right? So on that note, we'll again be jumping to tomorrow's analysis. So if we look at a daily time frame, we still did not get a closing below this particular level, although we did go down below it. We had breached it in at the start of the day, but we did not go down below it, and the closing has been very, very positive. I believe this level will need to be revised because we have created a new low. I'll again be using the Fibonacci tool, and yes, this zone will be, sorry, coming down slightly to this level. Right. So right now we are also at a daily resistance level of the entire fall of the retracement. We are still here. So, and I believe the positive RSI, positive divergences that we had been talking about in the last video on a 4 hour, on a 1 hour and 75 minutes time frame, that has played out very, very well. The divergence were present on 15 and 5 minutes as well. So those have played out very, very well. Right now, I believe the market can be a little bit volatile and be sideways for some time. Now, what eventually happens is up to the market. We'll not be predicting anything, but we'll be planning for all the possible scenarios and the outcomes. And yeah, so tomorrow's trade plan will again be very simple, guys. Above this, we are long. Any negative price action around this area, we can look at creating a short entry. Now, try to understand on a daily time frame, the bias was negative till around yesterday. Today, we have closed near the day's high. I will once again be repeating one of my most favorite scenarios, which will occur very, very less, but when it occurs, it will give you a very good RR trade, right? The risk will be very, very less compared to the rewards that you can expect in such a trade scenario. And that is something which I will be explaining. Tomorrow, what we need is a good bullish candle. By bullish, I mean the sentiment has to be bullish, not just the color green. But you need to see the strength of the buyers around here or fresh buyers entering. And we need a close above today's high. Okay. So we need a candle which is kind of bullish. which shows bullishness of the buyers in today's market at the open. This scenario can only happen at the open. We need a flattish to a minor gap up, minor gap down is fine. What we need is at the start a candle which is bullish, which will be going up above today's high, and then if at all the low of that candle gets taken out, we can enter into a short trade. Right? So this is a trade which is based on many conditions and criteria. Now, say for example, this particular trade wherein the market had not seen such a big fall, in case it would have opened flat and then we would have gone down below this and then we would have crossed the high of this candle. Say for example, this candle did not open around here but opened around here. Then we would have entered this particular trade, right? We would not have waited for any pullback that I had spoken about earlier in the day. But that day high was being crossed around here, which was very big distance which the market had already traveled. And see, post which if you would have entered, you would have been stuck in a sideways range itself. So this is simply a scenario wherein people are going long at the start of the day, people who would have missed out on this rally, just like me. But I will not be too sentimental about the thing and I will be going as per my plan. And in case of a bullish candle and then the low of that candle gets taken out, the SL will be just above this bullish candle and we can expect a good move on the downside, right? I will again simply be using the Fibonacci from the day's high to day's low, and we again will be drawing this zone. Okay, this is nothing but the fib levels from the day's low to the day's high, and for any short trades, I will be waiting for markets to take out these levels and we can plan for a short trades. Just to be sure, in case if we get any buying opportunity without this low being taken out, we can look at a buying trade around here as well, right? So these are the multiple scenarios. We open flat, we go up, get a bullish candle, the low gets taken out, we go short, right? We get a closing above here, the low does not get taken out, we get a healthy pullback, we go up, we create a long entry. Around here, if we are spending some time, we get any bearish sentiments around here, double top, base formation or consolidation, and then the low gets taken out, we are getting a short entry. Say, for example, we open with a gap down. Around here, we will be looking for a buying opportunity. In case if we get it, does not mean that price comes here and we are blindly buying. No, price action is supreme, and we must wait for price action to conform to our trade setup which is there, and in case of any positive price action around here is only what we'll be looking at buying. And in case of this price these levels break below this particular, we can also go short below this particular swing low, but then again that will have to be with caution. So we'll wait for uh, prices to give us the confirmation. Will be going short only below this. So these are the multiple scenarios that can be played out in tomorrow's market, and I believe I have prepped you enough for each one of them. And yeah, that's it from my side for today. I hope you guys uh, will trade safely, will stay disciplined, and I'll see you again in tomorrow's video. So yeah, that's it from my side for now. This is your Nifty Guy signing off for today's video. I will see you guys again tomorrow. Cheers and thanks for tuning in.